Hey guys, welcome back to the channel. Sorry if I sound a little different, I've been sick lately. But I've had a couple of people ask me about green investing. How is it different from regular investing? What is green investing? Well, let's talk about it. So let's start off with what it is, right? So, green investing seeks to support business practices that have a favorable impact on the natural environment, right? Often grouped together with socially responsible investing or environmental, social, and governance criteria, right? Green investments focus on companies or projects committed to the conservation of natural resources, pollution reduction, or other environmentally conscious business practices. So, green investments may fit under the umbrella of SRI, right? Socially responsible investing, but they are more specific. Some investors, they're going to buy green bonds, green ETFs, green index funds, green mutual funds, or just hold stock in environmentally friendly companies that support green initiatives. Now, while profit is not the only motive for those investors, there is some evidence that green investing may mimic or beat the returns of more traditional assets. So let's try to understand it. Let's try to understand what green investing is. So pure play green investments are those that derive all or most of the revenues and profits from green business activities. So green investments can also refer to companies that have other lines of business but focus on green based initiatives or product lines. Now, there are many potential avenues for businesses seeking to improve the environment. Some green companies are engaged in renewable energy research or developing eco friendly alternatives to plastics and other materials, right? Some other ones, they might seek to reduce pollution or other environmental impacts from their production lines. So, because there is no, set in stone definition of the word green, what qualifies as a green investment is open to interpretation. So, some investors want only pure play options like renewable fuels and energy saving technology. But other investors, they put money behind companies that have good business practices and how they, use natural resources and manage waste, but also draw the revenue from multiple sources. Okay, well, if there's so many different types, what types are there? Well, there's several ways to bet on green technology initiatives. They were once considered kind of risky, right? And some green technologies have been able to return strong profits to their investors. So let's go over some of the different types. The first one I want to talk about is green equities. And this is perhaps the simplest form of green investing, right? Basically, it's going to be to buy stock in companies with strong environmental commitments. Many new startups are seeking to develop alternative energies and materials, and even traditional players are making sizable bets on a low carbon future. Some companies, like think Tesla, have been able to reach multi billion-dollar valuations by targeting environmentally conscious consumers. Okay, the next one to talk about is green bonds. So, sometimes known as climate bonds, these fixed income securities represent loans to help banks, companies, and government bodies finance projects with a positive impact on the environment. According to the Climate Bonds Initiative, nearly $270 billion dollars of green bonds were issued in 2020. These bonds may also come with tax incentives, right? Making them more attractive investments than traditional bonds. So then the next one we want to talk about is green funds. So think shares of a mutual fund, ETF, or index fund that's going to provide wider exposure to green companies. Now, these green funds, they invest in a basket of promising securities, allowing investors to spread their money on a diversified range of environmental projects rather than a single stock, bond, or whatever it is, right? Now, green mutual funds include, the social choice equity fund, Portfolio 21 Global Equity Fund, Green Century Balance Fund. There's also several indexes that seek to track environmentally favored businesses. Think, okay, for example, the NASDAQ Clean Energy or Clean Edge Green Energy Index and the MAC Global Solar Energy Index. They both target the renewable energy industries. So, funds that follow these indexes invest in renewable energy companies, allowing investors to support the new technology while earning a potential profit. Okay, well, what would be the results of green investing? Like, why would you do it? Well, it was once considered kind of niche, right? Green investing, it's kind of got really big after a number of natural disasters brought attention to the climate crisis going on, and the amount of new money in ESG funds reached 51 billion in 2020, more than double the figure of the previous year. Now, although profit is not the only goal of green investing, there is evidence that environmentally friendly investments can match or beat the profits of more traditional assets. So last year in 2020, Morningstar did a study, right, and they found that there is no performance trade-off between environmentally sustainable funds and the wider market. This study also found that a majority of sustainable funds have outperformed their traditional peers over multiple time horizons. Now, with all this, of course, there's special considerations that we need to be aware of. Investing in green companies, it can be riskier than other equity strategies, as many companies in this arena they're still in the development stage, right? With low revenues and high earning valuations. However, if encouraging eco-friendly businesses is important to an investor, green investing can be an attractive way to put their money to work. Again, the definition of green may vary from one investor to another. So, some so called green funds include companies that operate in the natural gas or oil sector. Although these companies may also be researching renewable energy technology, some investors might hesitate to invest in a fund associated with fossil fuel companies. Prospective investors should research their investments, right? I always tell you guys, do your own research, right? Check out the fund's prospectus, or the stock's annual filings, right? See if the company fits your definition of green, right? Now let's talk about green investing versus greenwashing. Greenwashing refers to the practice of branding a company or product as environmentally friendly in order to capitalize on the growing demand for sustainability. While green marketing is often sincere, many companies have overstated the impact of their environmental practices or downplayed the ecological cost of their product. Let's take an example. Some companies have overstated their usage of recycled materials, leading consumers to mistakenly believe that their products were more sustainable. Many companies purchase carbon offsets to reduce their footprints, although this is difficult to verify the true cost of a company's emissions. Now, in a more egregious case, the IKEA was accused of using illegally sourced timber for some of its furniture products. To make matters worse, the timber had been verified by the Forest Stewardship Council, raising ethical questions about the business model of pay for play green labeling. So, in the securities world, some managed funds, they've attempted to greenwash themselves by rebranding in a way that suggests a greater level of sustainability. The only way to evaluate a fund's sustainability is just to examine it, right? Examine the assets. Well, then, what are some green stocks to buy? Some good ones or the best ones? Well, I'm sorry to say, there's no surefire way to predict a stock's future earnings. Right? Some of the most successful green investments have been in the field of renewable energy generation and storage. Um, as an example, Tesla's share price has grown more than tenfold from 2018 until about the middle of 2021. In the same time period, in China, there's a green energy technology company. They saw its market cap rise from 11 billion to a little over 70 billion. Excuse me. So, are they profitable? Can green investments be profitable? Well, while profit is not the only goal of green investing, there is evidence that environmentally friendly investments can match or beat the profits of more traditional assets. Again, there's another study done by Morningstar in 2020 that found there's no performance trade off. Right? We talked about this a little bit earlier. Right? There's no a majority of the sustainable funds they've outperformed traditional ones over multiple time horizons. Right? We talked about this a little bit earlier. So, how do you tell if a green fund is sustainable? Well,
Each fund holds a basket of securities representing a cross section of a larger part of the market. In order to determine if a green fund is sufficiently sustainable, prospective investors should first examine the securities listed in the fund's assets. In addition, some research firms may offer independent evaluations. Morningstar has their own sustainability rating, right? There's another website called State Street's R Factor, right? So, what are some key takeaways from this? What have we learned? Well, green investing refers to investing activities aligned with environmentally friendly business practices and the conservation of natural resources. So, investors can support green initiatives by buying green mutual funds, green index funds, green ETFs, green bonds, or just by holding stock in environmentally friendly companies. Now, pure play green investments are investments in which most or all revenues come from green activities. Although profit is not the only motive, there is evidence that green investing can rival the returns of more traditional assets. And then, since branding is not enough to confirm a commitment to green initiatives, investors should conduct thorough research to ensure that a company adheres to desired standards. So, for me, as is always, like I want to tell you guys, please do your own research. If you're going to invest in a company and you want to do green investing, just look into them, see what they're doing, where their revenue is coming from, see if they could back up some of the claims. It might be kind of hard sometimes, but as long as you're attempting to do your own research and getting into it, I'm sure you'll be just fine. I really hope you guys got some good information out of this video, maybe learned a thing or two. If you did, you liked the video, I'd really appreciate it if you gave it a like. If you're not subscribed to the channel, I'd appreciate that as well. Till I see you guys in the next video, y'all be safe.